Hello everybody and welcome back to my channel. My name is Kitty Mary and today is the long-awaited second part of the money series. In the last video that I will link down below as well, we talked about banks and the impact of banks and how your bank might very well be using your money to invest in fossil fuel projects, how you can stop it, which banks do not, etc, etc. But today we're going to be talking about stocks, and this video has been a while in the making because I've been taking my sweet time to actually learn a lot about this myself before I talk about it, obviously. Why has it taken me a long time to get into investing at all? Well, maybe because I never really thought that I could, or maybe because people didn't assume that I would, maybe because numbers and me has never really clicked. In my youth, there hasn't been this natural interest in money or finance or investing. But I think it's incredibly empowering to know something about this stuff, and I think it can also be a really great way of supporting initiatives and projects that try to make the world a better place, and at the same time also making your money work for you rather than just having them sit there in a bank account doing nothing and being invested in fossil fuels without you knowing. Like, that's just really not a vibe. No, thank you. But first, a disclaimer. First of all, I am not an expert. So if you're thinking about investing, if you want to get started, please consult an expert and don't just only listen to a person on YouTube. I'm just going to share my experiences and my take on this, what I did, and my reflections about this whole thing. And you can use that as a base, but definitely also consult people in your bank or third-party service. Do not only consult me, because I don't think I'm ready for that responsibility with other people's money. This is going to be about my reflections and what I did. So please also remember that I am not an expert and I haven't been doing this for a very long time, and there's possibly a lot for me to learn still. And another disclaimer: if you're here to learn how to make mad bank and become the next Jeff Bezos, you're going to be super duper disappointed. My goal here is that I want to invest something so I don't have to work myself completely to the bone for the rest of my life. And investing something, using that money to work for you, will create a buffer that makes me able to do that, so I won't have to rely on working 50-hour work weeks for the rest of my life. Please and thank you. So let's talk about how to get there. So first of all, what are stocks and how do they work? A stock is a type of investment that represents a small part of the ownership of a company, also called a share. So when you invest in a company's stock, you actually buy a tiny bit of that company. And stock prices change every single day. They change dependent on the overall external stock markets and market forces, and they also change dependent on what the company internally is doing. If more people want to buy a certain stock than sell it, that means that demand is higher than supply and the stock will go up. But on the other hand, if more people are wanting to sell their stock rather than to buy it, that means that supply is higher than demand and the stock will go down. You can earn money by buying stocks when they're low in value and selling them once they're higher in value. But you don't only earn money from your stocks if you sell them. You can also earn shareholder dividends, which means that you earn a profit of the company's earnings. These are either paid out to your bank account or paid in the form of additional shares of stock. Then there are also bonds, and bonds work a little bit different than stock. While buying a stock is part ownership of a company, when you buy a bond, on the other hand, that is a loan from you to a company or to a government. And one of the big differences here is how they create profit. Stocks may increase in value significantly, which will earn you profit, while bonds have a fixed interest over time, which means that it doesn't change as much. What this means is that there is a higher earning potential with stock rather than bonds, but it also means that there is a higher risk with stock. Okay, so how to invest? So there are a couple of different options when it comes to how to invest, and depending on how much money you have or how willing you are to risk them or how long you're planning to have them bound up in stock, some options might be better for you than others. I'm also going to tell you what I chose for myself, but first, the options. You can sit down and choose and buy your own stock completely by yourself. All you need here is an online broker or an investing platform. Stockbrokers are individual companies that you can sign up with, and through them you can start making your own investments. Furthermore, some banks actually offer these services as well. So logging onto your online bank account can also give you access to an investing platform if your bank offers this service. Then you'll be able to see the stock's value, how much it goes up and down, the cost, and all the information you need. Then you can decide how much you want to buy, and your stocks will become visible on your bank account. Pretty cool. You can also outsource all the hard work to a third party. There are tons of companies and services that specialize in third-party stock investments. This might be a good option for you if you don't have any experience with dealing with stock and just want to get started. You tell your broker or advisor how much money you want to invest and how willing you are to take risks, and then a set of experts will deal your stock on your behalf. They're very likely to know tons of tricks and much more about the market in general, and they will also very likely be able to see when a stock is going to go up in value or down in value, and thus make the best investments for you. And there are also tons of automatic robo-investors that can calculate all of this for you, so you don't have to have it in your brain. It's pretty neat. These companies make money by taking a small percentage of the profit that you earn from the stock selling, or they have an annual fee, depends on the service. And this is honestly a really great way for someone to get an overview of what it means to deal with stock without having a lot of experience themselves. And this is a great way to get started and learn and make some solid investments. And there's a but. You won't necessarily have a lot of control over what type of companies you will be investing in, or what type of companies will be invested in on your behalf. And if you're looking to make sustainable investments, this might not always be the best option, especially if there is not a lot of transparency between the brokers and your investments, and you're not able to see or decide what type of companies they will be investing in. It is actually possible to find both robo-advisors and expert third-party services that does a lot of this stuff whilst also having sustainability in mind. So I've left links to some of the US options down below, but I'm sure there are many other kinds. My bank actually offers this type of experts dealing with your stock on your behalf type of service, but I couldn't really specify which companies I would like to support and invest in, and which companies I would prefer never saw a cent of my money. So I am dealing all my own stock at this point. I actually think it's super interesting to learn while doing, but I would honestly also love one of these third-party companies to be able to deal at least some of my stock for me instead. So I am looking out for opportunities for that to happen as well. I invest in renewable energy companies, as well as companies that I know from my work do a lot of good, like local production practices and sustainability initiatives, etc. When researching for this video and for life, I also set up a meeting at my bank with my investment advisor, and I really got to know all the basics of investing. So if you're interested in getting started but really don't know what to do other than watching this video, I think setting up a meeting at your bank, if you have an investment advisor at your bank, or asking your bank if there is one, is a really good step. So, how to invest sustainably? So when talking about sustainable investments, what I have seen throughout the internet and generally when we talk about sustainable investing is that there are 6 layers or 6 different points on a spectrum of sustainability. Knowing these differences and being able to tell these mechanics apart can be a really good and beneficial way to communicate and articulate to a broker or anyone who is helping you with your investments what it is that you want and how you want your values to be manifested in your investments. So here are the layers. Number 1, here the investors only prioritize profitable financial outcome, and sustainability is not a factor at all. Number 2, the investors include what is called ESG factors in their analysis. This stands for environmental, social, governance. But these factors will only be included or respected if it does not affect the profitable outcome. Number 3, then there are the investors who by default exclude polluting and/or controversial industries from their portfolios. This can be everything from fossil fuel companies to weaponry to tobacco, pornography, basically any kind of spicy business. Number 4 is the best-in-class category. Here the investors choose the company in their field that is the most sustainable, and that might sound really good, but it's not often that the bar is high at all. Big companies like Amazon or Microsoft or Inditex, who owns Zara, might be a tiny bit better than their competitors, but they're all billion-dollar corporations that are inherently incredibly unethical. Number 5, then there are the investors who only include companies with a positive impact on the planet, for instance by using renewable energy resources or by integrating sustainable food systems. Positive impact. Finally, number 6, here the beneficial financial performance aspect comes last to sustainability. Ideally, when investing sustainably, you really want to look at the 4 to 6 strategies, maybe 3, but definitely not 1 and 2. 6 often comes with some financial privilege already. Generally, profit is a priority if you don't have any money or if you have very little of it, while financial gain might mean less and less if you have lots of money. So there is a privilege within the last number 6, I feel like, generally, in many cases at least. But as a mindset, I think it's really good and healthy to sort of note to yourself that sustainable investments is not about making bank or creating huge, overwhelming amounts of profit and wealth. That's not necessarily what we're building. It really just should be about sustaining ourselves and our needs for the future. That's at least how I see it. Now, a really important thing to remember in terms of investments is diversify your portfolio, diversify your investments. When looking to invest sustainably, it's pretty easy to round up with all your investments in one basket, to only invest within one field, and that can be really detrimental to your investments because the market always goes like this all the time. So if you diversify your investments and you invest in different types of markets and different types of industries and fields, it's very likely that once one market goes up, another goes down. And you will sort of benefit no matter what type of market goes up and down. Does that make any sense? For instance, invest something in renewable energy, invest something in sustainable food systems, invest something in sustainable textile production, some in forestry, some in water resources. Don't just put all your money into one tiny thing. That's just generally not a very good move. Here are some industries that I would want to invest in or that I already have. We have green power investments, water stock, wind power, solar energy, pollution controls, green transportation, waste reduction, organic farming, and plant-based food innovation. And here's some companies I would never, ever, 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 ever invest in. Fossil fuels, tanneries, mining, shipping, animal agriculture, air travel, and fast fashion textile production. There are of course many more in both lists, and I will gradually learn more and more about this, but this is just a very good outline. Now, how to monitor your stocks. I generally feel like there are two different people here. There is one person who looks at their stock every single day to see whether or not it goes up or down, and then there's the person who buys stocks and forgets about it for a year. And I would love to be the second one, but I think definitely I'm the first one. And when I was talking to my investment advisor in my bank, we were also talking about how to monitor your investments properly. And one of the things they said to me was that once you invest a lot of your money that you have earned, you will want to know how they're doing. You're curious to know whether or not you're losing some or gaining some. But please don't look at your investments every single day. Don't even look at your investments every single week. It's a great idea to monitor them, to check out how they're doing, to research on the companies and how the companies are doing. But looking at the lines go up and down every single day can be really detrimental. It can be really stressful to you, and it can make you or push you into making some financial decisions that might not be the best. Because even though something is going down, it can go up next year or the year after that, and that's a really good thing to remember. So what I've learned is that a good and healthy place for me is to check in on my investments every month or every other month if I forget it, because I honestly try to forget about it some of the time. I can see my stocks go up and down from month to month, and sometimes I get a little profit payout, and sometimes I end up buying more stocks because the stock that I already got was really low. So I was sort of thinking, haha, invest a little bit more, because it's very unlikely that renewable energy will keep going down. It will go up, it will be fine. Famous last words. But the point is, find a good healthy place for you where you're not super stressed over the fact that you have stocks that are increasing or decreasing in value. Find a place where you can monitor them without having it affect your mental health. So to sort of summarize, here's some few quick tips on how to get started. Work with an expert or ask your bank for advice. This is just so incredibly important. It gave me such a great overview to talk to someone who actually knows a lot about this, who has like a degree in it and is like a certified expert, and that's just way better than any guide I've read online. So if you want to start investing and you're serious about it, it's a good idea to talk to someone who's done it for a long time and has a really good overview that they can share with you. Invest in responsible ESG funds. It's a really good idea to sit down and research the companies you're thinking about investing in, just like if you were to buy a product. So look around the company's website, find out if they have any sister companies or if they have like a big mother company they're owned by anyone else, so you know exactly where your money is going. Diversify your investing across several fields. Again, really important. Take a look at some of the things that I've mentioned here, but you can also completely come up with your own list. But just generally, it's a really good idea to diversify and spread out your investments over several different industries to not have all your eggs in one basket. Monitor your stocks responsibly. Again, find out what works for you and find a way where you can check in on your stocks and research how it's going without taking a toll on yourself. And lastly, research your investment possibilities before investing. So generally take everything that we've talked about and put it together and make a conscious decision about what you're going to be doing, both in terms of your investment and in terms of how we as consumers navigate. I hope that this video was helpful. If you have any other questions, please leave them down below. Let me know if there is a part 3 of this series that you would like from me to talk about, anything else related to the money question. I've left videos that might be helpful or that taps into some of the same things as I've talked about here in the description. There's also one about how I make my budget and how does a zero waste to spend money kind of video, as well as the bank impact video. You can go and check them right now. Thank you so much for watching. If you like this video, please leave it a thumbs up. That would really make my day. And subscribe to this channel if you haven't already. I would love to have you there. We don't only talk about money and finance stuff. We also talk about tons of other aspects of sustainable zero waste living. So again, I would love to have you there. Thank you so much for watching. Have a great day and take really good care of yourselves. Until next time. Bye.
Thank you so much for watching this video, and also a special thank you to my Patreon supporters. You guys help me create green zero waste content and I love you guys. You can find the links to my social media accounts down below and the link to my Patreon on this screen. Bye!